So, what is a interest rate buy down? A lot of folks are asking me that these days. So, an interest rate buy down is basically where you are buying your rate, you're purchasing or paying for the rate to be lower for a specific amount of time, not the entire 30 years. So, I'm going to give an example for a 30-year conventional loan where for 30 years, most are at a fixed rate, and that fixed rate is one rate the whole entire time they have the loan on the property. An interest rate buy down is where the interest rate is lower in the beginning of the 30 years for a set amount of time. Sometimes an interest rate buy down is 1 year, 2 year, 3 years. There's 3 year buy downs, 5 year buy downs. But it's basically a rate that adjusts higher later. And what people are starting to do right now in this climate where the rates have hovered in the sixes and the sevens is because they want their payment to be a specific number for affordability. These lenders, when you shop for a mortgage with a lender, a lot of times people are focused on the payment that they need to make, and their payment has to be a certain amount, maybe because of their debt to income ratio. So, with that being said, a lot of builders right now, new home builders, are offering a buy down by their properties. And so, I'll give you an example. You would maybe buy a home and the interest rate would be 5% for the first year or 2 or 3 years. And then it would adjust to the today's market interest rate. Maybe that's 6.5 or 7 or whatever that is. But you know that for a brief period of time, your payment is lower because your interest is being calculated at a lower rate. So, what you can also do is when you're buying a home and you don't have a lot of cash, if there's not a lot of interest in the property that you're making an offer on, you might be able to add seller paid closing costs to your offer, which would pay for a rate buy down. So a lot of lenders will charge you a fee to have a buy down for the first year or 2 years. So if your payment is important to you and it needs to be at a certain place, and a buy down will help you afford a more expensive home, then that is something that is appealing to some buyers in this market, to have a lower interest rate, knowing that going forward in the future, they're probably going to refinance. Now, there's a pro and a con to this. Pro, you have a lower payment, you pay less interest in the beginning. Con, maybe when you refinance, you'll have to pay the refinance cost to refinance the loan at a future rate. And we don't know for a fact that the rates are going to be lower. We hope that they will. But let's say in 2 or 3 years, the rates are not lower, then you are not going to refinance. And then you're going to now have an adjusted mortgage to the new rate that you were promised. So those are the reasons why you would use it or not use it in today's market. And, it's very expensive. You need to talk to your lender to actually get a price on what a buy down will cost. But some new home construction builders are offering it as an incentive to buy their homes. So we're selling a lot of new construction homes on my team that are offering extremely low rates, tons of closing costs, incentives to buy their inventory homes that are sitting on the market. So if this is something that you're interested in learning more about, please reach out to me. We do these types of transactions every single day, and I could hook you up with a great lender.